This is your daily TA wrap. Coming to you live from the Rocky Mountains, as we always do, doing this show 4 times a week. Monday through Thursday, live at 9 o'clock Eastern Time, here from the base of the beautiful Rocky Mountains. And folks, this show is not your normal show. It is technical analysis today, where we do neoclassical analysis. Slightly different twist than what you'll find anywhere else. And what does that mean? Well, it means we try to find trend, stay with the trend, and supply and demand on the charts. We were talking about the potential for a bounce, and then it probably gets a lot harder. Well, we definitely got a bounce today. Big bounce. It all came at the open. You had a gap up, open, and it closed right at the lows of the gap. You got dojis in some cases, you got some ugly bars in other cases, but it was higher, and it was higher by quite a bit. S&P's 0.5% higher, a little over 0.6% higher on the index, which was the driver. Industrials did get 0.66. We had Citigroup come out with earnings. You're starting to see earnings again. Schwab, Citigroup, there was a number of earnings today. They got bought. But if you look at those charts, they should have got bought. So I don't know that that really tells us much yet. We had a complete collapse in gold, $3 down, 2.4%. Silver, same thing, 2.3%. And that was pretty much the big story. Not that much else happening. Bonds got sold off. So big bounce, back to the top. What are we going to do now? Well, if we start with the S&P 500, we were talking about this July 8th bar, that top 1676.39. We closed 1677.10, so we're over. Right? To me, that was a critical bar. Right? Can you get over it? Can you stay over it? Well, you're over it. Now, can you stay over it? And if it stays over tomorrow, I think that's enough of an answer. And if so, it will push to the tops and probably make some new highs. So when I'm looking at it from that perspective, it looks to me like you're going to see this S&P push, or at least it has pushed, but it's going to try to push farther tomorrow. And if it does, then it's going to take out those highs, or at least test those highs. Volume lighter than the day. Than this day that it was testing, right? That July bar there. So from that perspective, what do we got there? 33 million. You did 27. So, and it's really 10 times that. So it's really 33. What is that? 33 can't be 330 million. That's not right. 3.3 billion. That's what the number is. Okay, so going forward, now that we see July's push up again, right? Can this sustain? Can it push farther? That's the S&P. NASDAQ been a little bit less strong, shall we say, the composite, not the NDX. The NDX, actually, let's do the NDX because that's the strong one. NDX actually got over the highs, stayed over the highs, less volume, but over the highs. So the two strongest ones, definitely still the strongest ones, and definitely pushing. If you look at the Dow Jones now, the Dow Jones, even though it shouldn't be back up here because it had a failed retest regen. When you see a failed retest regen, that says it's probably in a range trade. That range to me would probably be about that area, and you get about half and half, you know, the other halves, right? So range trade, but what does it do? It comes all the way to the top of the range, tests the top, and does less volume. That's a test failure of the highs. So that suggests that the range trade is going to stay in place. We'll see if it does, but that's what that tells us. So you got S&P's got over a key bar, held it. NDX over the top, holds it. Dow Jones fails at the highs. NASDAQ composite, that was where we were going. Let's go back to that now. The July 8th bar here, that's the breakdown bar, 443.56. You get over it, back under it, you close under it, you got less volume. That's a failure. That's a failure to get back over the bar, hold over it. And if you look at the Russell, which I have said many times is actually the best indicator, it has been. It's going into an area that it should be able to get over, which is the bottom of that swing point bar that it broke that low. Well, let's get the number on the low. It's 1168.53. You go into it 1169, you close underneath it, you're doing less volume. That looks like it's going to try to fail, and it's failing on a very weak bounce. Now, if you want to take the negative side, it really depends on what you want to look at, right? Because you can argue both ways still, even at this late date on this huge move that's been in place for a long time. You could argue that if this fails, which it did today, that is setting up the ABCD structure to come right back down the other way. And that structure would actually take it into these lows. And if you pull this back, and remember, and let me get rid of that now, if you pull this back and remember, we've got a lot of swing point lows down here at these levels. And so a break of these levels would be fairly key, right? So if you were to break down and you come down into this area, the 1117, which is a number we're looking at over here, you know, it's about 1117. That 1117 just gets you right above all the breakdown area, about 20 points up. So, you know, this is not, you know, it's not danger zone yet, but it's definitely something you have to pay attention to. There's like the potential for a double top here. You've got some serious bars down at this level. If you press back down, you close this gap, and you close in on that low, it's going to be a problem. It's going to be a big problem if it breaks. So that's the backdrop on the negative side. On the positive side, well, the positive side is this market never wants to go down and stay down. And so far, it looks like it's trying to do the same thing with the strongest portions of the markets simply hanging higher. Now, this week there's about 130 companies reporting in the three major indexes, the AMEX, the NASDAQ, and the NYSE. Next week, of course, it speeds up. We get a lot more in the next 3 weeks. After this week, you know, the bulk of the earnings will be out. Tomorrow, you've got some big names. You've got Intel. I have to pull up my sheet here, but there's about 4 big names, and it's going to be 4 or 5 big names throughout the week. Johnson & Johnson, Intel, IBM, Google. There's a bunch of big ones this week. You've got JP Morgan, Goldman Sachs tomorrow. So you have some definite firepower that could move this market either way. And earnings is going to be the tell of the tape. And I move over to the XLF next, leaving the indexes behind, pull over here. Because what I want to do is I want to focus on those sectors that are starting to report. We had Wells Fargo on Friday, and if you take a look at Wells Fargo, let's actually pull Wells Fargo up first. Wells Fargo goes back over Friday's high, back underneath. This thing's going to come back down and test this low and probably break it. So that's Wells Fargo. That's the most heavily weighted in the XLF. You had Citigroup today. Let's take a look at Citigroup. So Citigroup gets a big bounce up, closes on an ugly candle. It was testing this big bar high, 34,816 on the volume, gets over it, has a little bit more volume, will test again. Well, what is that? That's just a range trade. There's really nothing there. That's one of the weaker financials. Now, the ones coming out tomorrow are going to be the more interesting ones, JP Morgan and Goldman Sachs. JP Morgan has a decent bounce today, closes with less volume, so it gets back over into the swing point low. This is the retest, regenerate. Gets into it, is doing the retest. Tomorrow's going to be the tell of the tape here. Whether it breaks out, you got 3 swing point highs at the top. Can it break out, get over those, and push higher? Or is this really just more of a breakdown that's coming? Let me get the weekly up on this guy. So if I pull the weekly up, on the weekly you can see even if it spikes up over those little swing point highs on the daily, the big breakdown bar here is way up at 60 still. So, you know, this may get a bounce tomorrow, and if it does, I mean, it's a decent weighting. It can take it right up to that breakdown area. If it doesn't bounce tomorrow, then you've definitely got some serious problems in the XLF. And if we look at Goldman Sachs, which is another decent sized weighting there, Goldman Sachs, this one's set up differently. You got a swing point high up there. The breakdown bar in this case was here, tested into it, didn't have volume. This one actually on a weekly looks like it is going to try to pop a little higher. Let's see what the daily looks like on it. The same thing on the daily. So you got volume sitting up here at the highs. So Goldman ought to try to go test those highs tomorrow. And then the key number will be is, does it fail at those highs or get over them? You know, so that would be the test on Goldman tomorrow. JP Morgan, like we said, has a test as well. Why am I dwelling on the financials? Well, because the financials are the largest weighting, and they're the one that can't get going yet. You got a range up here at the highs. Excuse me. Tested the bottoms of the range last week. Now pressing back up to try to test the top. But you can see it gapped up today, closed on the lows. That's not exactly bullish behavior in my opinion. So financials going to be a key part of what happens next. If you look at the ones that, you know, again, going back to strong and weak, you got IYT over the highs. You got the SOX with big volume coming in today, pressing towards the highs. You've got the XLB that's trying to press down lower. That one looks like it's going to work lower. The XLE had already transitioned trend, trying to bounce. Weak bounce. XLF we just looked at. XLI also pressing up, doing a retest regenerate, fails on the retest regenerate on price, but has volume, probably test again tomorrow. Looking farther, the real strength, of course, has been technology over the highs. XLK, guess what it did today? Finished off an ABCD structure to the upside. So the ABCD structure that was in place is done. What does that usually mean? Well, that usually means you're going to try to retrace now, and that should be the case here. So XLK, yeah, looks great. Just finished off an ABCD structure, so the projection is met. That should cause it to try to slow down. What's moving inside that? Well, Apple is the big one, and what does Apple do today? Test fails at the highs on lower volume. Next heaviest weighting is Microsoft. Microsoft tests the highs, fails on lighter volume. Test failure. Google. The Goog testing the highs has decent volume. And if you look at the other one, Google L, also testing the highs, has decent volume. So Google looks like it may be able to push a little more. The two largest weightings look like they've done what they're going to do. So we'll see if Google is going to be the savior for this group or not. I've been noticing some of these others trying to press back up, but they're struggling. Priceline's one of them. And you can just go across the board. A lot of these high flyers, you know, Workday, on and on. There's a bunch of these that, you know, are struggling. They're struggling to be quite simple about it. And then you go over and look at biotech. Biotech, put this back on a weekly. This is the BBH. This one had gone, you know, 2/3 of the way back up now on absolutely nothing. And that's the case of almost everything you're looking at now. You got huge volume declines, and then you run them back up on nothing. Now, you know, it's okay if they get over the highs and keep going. They're testing now. This is kind of the critical moment, and the reason I bring all these up. This is, you know, this is a critical moment. You're into the zone. You're testing into the zone. This is the last place it's going to fail, if it's going to fail. If it doesn't, it's going back to the highs. And if it goes back to the highs, everything else is going back to the highs. So, you know, when you're looking at these sectors, and here's the IBB, they're testing into those highs now. This is the critical point. Either they make it or they don't. And of course, they've gone up on absolutely nothing, which has been the case pretty much straight across the board. Looking at the last couple here, XLY, consumer discretionary, back at the highs, 67.85. You're back up to get over it. Now you're consolidating up there. Bring it back. Look at it on a daily. Ugly candle here today. Really nothing on it. We'll see, because it's testing that big bar spike high of, I have no idea why it was so much volume that day. And then the other one is XLV that's set up almost identical. It does get over that downdraft bar. It closes just over it. That was 61.78. You're just over 61.82. It says it could test the highs again. But they're struggling. They're all struggling. Gold. Gold finally gets taken to the cleaners. I mean, this, you know, we've been talking about this thing should come back, right? And this whole time it's been trying, and it was this, like this range trade, and then all of a sudden you break out to a higher range. Well, today you give it all up and you're back down underneath all three of them in one fatal swoop. Volume, not that much though, right? So you're coming back into the big bar. That low is down into here. There's actually some decent support right about there inside that bar if you look at it on an intraday basis. So if I bring up like this chart, take off all of this, put up gold, and then look at it inside that day. So I put up, say, 20 days, and then look at this. You can see that was the spike bar. That low is 125.12. Today it trades to 125.43. Volume there, I would expect it's going to trade back down there, probably test that low we were just looking at, this low here, and that would be kind of the critical moment for it, because if it can't hold there, and that's a good spot for it to hold, because you got some decent volume there, but if it can't hold there, you're back to the gap. So gold still looks bullish overall, but definitely got it smacked today, and that's usually the way gold trades. This thing went way too far on the upside without any kind of a break, and that's like inviting disaster. Silver, same thing, although silver has been stronger. Silver, oops, not XLV, but silver, SLV. Silver actually came back into the top of that 619 bar. 2010 up there, it closes at 2010. Silver actually looks like it's going to try to bounce a little bit more tomorrow, and then we'll probably see some more downside. Now, I'm not a big fan of gaps in commodities. There is an island reversal up there, but doesn't carry a lot of weight with me, and that's the classical stuff speaking. I don't practice that much anymore, but it's worth pointing out when it's as obvious as that is. Bonds range trading. They're back to the top of the range here. They can't do anything, just kind of sitting there. I noticed that the FXE really can't break down. It's still inside this big bar from June 5. That's the bar that's going to tell the tape, you know, it's traded, you know, you can look at it from this perspective. That's the range, right? And usually when you get a bar like that, either the next few months or few weeks, depending on your time frame, or on the daily, so the next few weeks, it's probably going to trade inside that range. Yeah, it got underneath it, yeah, it got over it, but what's the bulk of it? It's right inside of it. The next move up or down is probably going to be the one that really gets some decent follow through, and so that would be what I'm looking for. FXE needs to get weaker if Europe's going to get stronger, which kind of is a segue into Europe. Let's look at the DAX. So the DAX pushes back up into that swing point low. That's the bearish retest regenerate. So you got a bearish trend, bearish retest regenerate. As it pushes back up, it should, and it's within 6 bars, it should, if it's going to go lower, should regenerate lower off of that. Well, let's assume the best case, you know, best case from a bounce point and then failure. That would take it all the way up to there and then back down. What does that do? It takes it into some more swing point lows. So you can see the DAX really, if it's going to break this cycle, which is these lower lows starting to print over and over, it's going to have to get up here, hold, put a higher low in, right, and actually get a trend transition on some sort of a swing point high. Right now, the only swing point highs on the DAX are all at the highs. They're all up here, right? Now, if and when it ever breaks that, that's going to be some powerful stuff. But right now, you just got to get it back to a range trade if you're bullish on this particular area. And right now, that's the high it traded into. There's some decent volume there, and you got to bounce off of it. Nothing more right now. If you look at the rest of the majors, the CACs, FX, what is it, FCHI, right? Here you got a very weak bounce, and this one almost looks like it's not going to be able to even get over this area. So that's about as weak as you can get. Your swing point lows are up here. The retest regen would be up there, but it's gonna have a hard shot to get up there. Probably takes it more than 6 bars, which means it only has to test that low area as it comes back. And the FTSE kind of looking the same way. And I go to Europe because Europe is the weakest of the major markets, world markets. FTSE got a decent bounce, not much volume on it. If you look over to China, you know, and to Europe, not looking too bad. We can start with Japan. Japan still hanging at the highs, got a decent little bounce last night. So Japan, you know, actually looks like it could trade a little bit higher, probably into the top of this bar. But I think they're all range bound now until Europe decides what it wants to do, or the United States totally breaks out one way or the other. Top of this is 15,375. I would expect it tries to trade into that tonight. Hong Kong, let's look at the Hong Kong shares. They're kind of trading up there, bounce. That was a test failure today though, so I suspect the bounce is about done. So Hong Kong's probably going to have a little bit harder of a time than Japan. And if we look over at the Hang Seng, which is the 8 shares trading in Hong Kong, that one actually looks like it could test just a little bit higher one more time tonight, but also looks like it's going to fail and be range bound. So I don't see much in Asia going to push us up. Nikkei is probably going to do okay. The Taiwanese market, of course, is doing fine. That's chip country, and chip country seems to be where the action is right now. I did notice that we had a big breakout on the Bovespa, which is the Brazilian index. And let's pop that guy up. So we got a nice breakout over 2 swing point highs, some decent volume. Let me look at the weekly. And the weekly is going to go up and test the highs. So 56,747 looks to be the number. And those are the major ones overseas. One more I might point out is it looks like the honeymoon in the Indian market is finally over. This was a ridiculous run off of a change in leadership at the government. You're back into this big bar. You know, the range here, and I thought this would mark the range, but as you can see, it actually did get another one on top of it. But the big range is this bar. And so, like, unlike the one I just showed you, where most of the trades over the next few, in this case daily, would be weeks, well, actually, I guess it did, really, when you look at it. You did get most of them inside there. You got the one cursor out, then the next one that looked like it was going to just run, big spike down, now you're back in the range. So I believe this is the range. This is probably where you want to look for it to trade. And the bottom of that range, when it finally gets back down there, is a great buy probably the first time down. So that's probably worth keeping on your notebook if you're looking for some index exposure. All right, let me see if we have any questions. I didn't remind you, but you can always send me email support at TA Today. You can text me 303-912-9110 and I'll try to answer those questions, or of course you can type it in if you're logged in over in the window. So if you don't have a login on live stream and you want to be able to type in questions, it's fairly easy to do. You just go to livestream.com, create a login for yourself, and when you come into the window here, you just log in as that user and you'll be able to type in questions and ask me questions. Okay, so unless some questions pop up, let me check the email and the text right quick, see if we got anything. And it doesn't look like it. So let's talk about, while we have a chance here, let's talk about the metals, because I think the metals are probably the most interesting trade right now. And I'm going to move over to the GDX. And the GDX, of course, is the large cap gold miners. Now, you'd had a big push up, and I actually want to put this on a weekly. You'd had a nice big push up off the lows. And if you remember, those lows came into the highs of the prior low. And a lot of times that's the way these things work. So you come into this high, it's 22.19, you pop into it 21.93, right? Volume's there, right? No volume here, flips around, works its way up, almost gets to the swing point high. And that also is reasonably typical, especially when you make a straight up run like that. So what can you expect now? Well, some sort of pullback, right? The next question you always have to try to ask yourself is, where should it pull back to if it's going to? Well, I like to look at ranges. As you know, I do this a lot. And I see an obvious range here off this wide price spread reversal bar that had volume on it. Right? That's a key bar. Anything that trades above that is going to be a key breakout. And as you can see, the last time it tried to get up there, it got to the top of it almost, set a swing point high, pulled back deep, about three quarters of the move. Now makes its run back up and finally gets a decent sell down today. Good support is going to be at the bottom of that bar, and it so happens that the TA Today charts draw that in with green for you, and you can see the resistance is right up there at the top. And so the charts are telling you where the action is in terms of the tops and the bottoms, and where can you expect this thing to trade to and to fell if it's going to. So from a standpoint, this bar is the one you really want to watch. That's the one that has the volume. So what I would be interested in is, what does it look like when it comes back into these lows? That's where I would expect it to get bought. I would expect, if it's going to get bought, that's where it's going to be bought. Where's that price zone? Well, if you measure it, 25.37, and we're trading tonight at 26.60, right? So another $1.30 on the way down. That's a pretty big percentage, 4 or 5%. That's enough to make people wonder if this is going all the way back to the lows again. I think that's probably going to be a decent place to pick it up if you're so inclined. That number is 25.37. Now let's go back to the daily bar, and if we look at it on the daily, where is that? Well, how do these things always line up? 25.14 is the bottom of the big bar. Now, if we're going to retest regen, we'd have to come all the way back to these swing point highs over here. That would be this area, right? And that's the bottom of that gap. And when you think about this bar, where's the bottom of that bar really? It's not where you see it, it's the gap, which is the top of the prior bar. And where's that? 24.78. This top's 24.67. That would be a retest regen, automatic buy almost always. I don't know that it will actually get there on the first trip back. Matter of fact, it's going to have a hard time getting all the way back to here probably. But that would be the area that I'd be looking at it. I assume the GDXJ is probably lined up somewhat the same. Let me take a quick look at it. Looks like I have a question. Let me take that first so I don't miss it. EWW. This is the Mexican market. So it's the CAP shares, the iShares. And this one's just grinding higher. Let's see what it looks like on the weekly. This has been fairly strong. So you get over the swing point high 2 weeks back, and you're pressing towards the highs. 70.63, you're at 69.80. So it's not that far away. Put it on a monthly. And that top on the monthly is 68.87. So on the monthly so far you got the breakout. So you got a breakout taking place on the monthly. Already had the breakout on the weekly. And I don't see any serious resistance until you get the low of the high, which is 71.34. So 71.34 down to 70.63 seems to be where this one's going to try to head out. That low, you got an ABCD structure here, 58.83, 50.65, that's about 650 or so, and onto this, gets you about 68, 69, about 69, and where's it at? Well, I guess that that tells you you're kind of extended, right? ABCD structure just finished. So, it's going to be hard for this thing to keep going. It's pretty much done what it wants to do. So you might get that test of the high and then the pullback, but I wouldn't look for too much more than that right now. And that would be a retest regen off that daily, that weekly, which means it could test all the way back to here. So when you look at it from all that, right, where's your risk reward? I don't see a lot of reward for the risk you'd have to take to make it a high probability trade. So I'd probably lay off of this one for now. Unless you're already in it. If you're already in it, I just put a stop on it and let it try to run up and test the high and see what it does. I would also try to probably take profits up there. Okay, running out of time. I'm going to have to leave it at that. As always, I thank you for joining me. I'm LA. This is, and it was, your daily TA wrap. Have yourself a great night. Take care. Until next time.